Joining us is the person behind that call, Francisco Blanch. Loads to talk about in the commodity space, Francisco, today. But first on oil, is this being driven by demand factors, inflation, or the Iran negotiations and the situation unfolding there?
I think it's a combination after the sell-off that we saw last week post-Fed. And frankly, our view is that prices, maybe not in the very short run, because we'll probably end up seeing I think some more supplies from Iran. I think ultimately heading into year-end and into next year, prices will eventually rise quite a bit, and we think we could see $100 Brent, as you pointed out, mostly on a combination of demand and supply factors, and the fact that OPEC is likely to hold back supply over the next 12 to 18 months, in our view.
Even if other commodities do roll over, which we've seen already in the price of lumber and gold and copper last week, I think was down 8% or more on this view that economic growth could slow and inflation might cool off?
Well, oil is a little different. Remember, we are coming out from a very deep recession last year in oil. Demand is only starting to recover. In the U.S., we've seen passenger traffic through airports going from 300,000 passengers a day to now over 2 million. So trying to recover pre-COVID levels. Same for road traffic. But the rest of the world's really behind. Europe is coming up with their vaccination campaign starting to really kick in and getting to that 70% rate of vaccinated people that you need to get to limit the pandemic. But I think the rest of the world's really behind. I think emerging markets are going to come out of this in 12 months. And now we're seeing all these vaccines heading out there. So probably by sometime next year, the vaccination campaigns will really gather pace and allow for prices to rise and as demand recovers. So we're still nowhere near the levels of demand that we saw pre-pandemic in oil.
All right, so that's behind your $100 a barrel call for 2022. What else? What are the other potential reasons that you see us getting to $100?
Well, so there's three key demand factors to think about. First, as I mentioned, it's all the pent-up demand, right? So that's all coming back. Second reason is work from home, which in our view is going to mean work from car. People who are sitting at home 1 or 2 days a week are going to use that time to run errands. We'll probably continue to move farther away from city centers. And then beyond the work from car situation, we think there's going to be, on the demand side, an avoidance of mass transit that will lead to more private vehicle demand. We are seeing that everywhere around the world. Mass transit is lagging the recovery, and we think that'll continue to be the case as people are reluctant to jump into buses and subways and will use their car when available. And then we think there's issues, potentially big issues on the supply side. Last year, supply got hammered as well as demand did, right? And it got hammered for a number of reasons, but investment took a big hit. And we think on a forward basis, it's going to be even worse on a combination of government policy to prevent climate change, judicial decisions like we saw in Amsterdam against major corporations to reduce their carbon emissions. And number three, just investor pressure, whether it is for ESG reasons, as we saw in the case of Exxon, or it is simply financials, as we've seen with some of the shale players. We think CapEx will be under a lot of pressure to the downside. So those factors, we think, on the demand and supply side will help us get a little higher. We are putting the market in control of OPEC right now. And OPEC is only recovering from the abyss of last year.
Shepard Smith here. Thanks for watching CNBC on YouTube.